This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Brett Swarts, founder and CEO of Capital Gains Tax Solutions. Capital Gains Tax Solutions provide one-to-one business owner and investor guidance throughout your entire deferred sales trust process from selling to reinvesting. They will help you outline the options of selling or not selling and the tax consequences for each deferral strategy, including deferred sales trusts, opportunity zones, 1031 exchanges, Delaware Statutory Trusts, and Charitable Remainder Trusts. Then they will teach you everything you need to know how to design a tax-deferred sales trust transformational exit plan and provide DST trustee services help you achieve proven results. Brett, thank you for joining us.
Paul, thanks for having me on the show. Pleasure to be here.
Great, thanks. So tell me a little bit about your background. What have you been doing before this?
Absolutely. So I'm originally from the Bay Area, Northern California, and I grew up learning the sticks and bricks of entrepreneurial business in kind of the Silicon Valley, Greater East Bay. My dad building houses, owning rentals. And I went to college and studied real estate and studied I actually studied business, and then during college took an internship at a company studying real estate at a company called Marcus and Millichap. And along that journey, I learned kind of different ways to defer tax and grow wealth. But it was during that time, Hall, I don't know if you remember, during the 2006 area, everything was pretty high. But then guess what? A couple of years later, everything came crashing down. And so I was a brand new broker, just trying to make it in the business. Newly married, my wife at home, and I don't know if you've been so scared, not sure how you're going to provide for your family, or that's where I was at. So I came out of college playing basketball, very successful on my academic and athletic journey, to all of a sudden coming to a grinding halt for my career. And so as a real estate broker, you're 100% commission, and you only get paid if you close a deal. And so I went from making just a little bit to next to none, and I had to pivot and I had to adjust. And I did what every good entrepreneur does, or maybe even a startup person who's listening right now, where they get a side hustle or a side job. And so I started to work multiple jobs on the nights and weekends. The main place is at a place called Cheesecake Factory. It happened to be my wife's and I's favorite restaurant. And so by day, I'd be making calls and trying to solve problems for clients on the multifamily investment front. And by night, I'd be serving cheesecake to keep the dream alive. So I did that for about a 2-year period of time. So I was going through some of my struggles. Guess what? So were a lot of my clients. A lot of high net worth individuals who had bought high and mostly because of the 1031 exchange before the market crashed, taken on too much debt. And now they were fighting with banks and trying to renegotiate. And I was helping them do that. So along the journey, we had to figure out a way to A, what happened? And B, how can we help this to never happen again? And at that moment, about 2009, a gentleman came in and speak about the strategy we're going to talk about called the Deferred Sales Trust. And that changed everything for me, but it took a while to understand what it was and how it could apply to my clients. So the plan was to roll it out slowly, communicate and educate, grow my business along the way, and help them escape feeling trapped by capital gains tax, which leads us to where we are today. Fast forward over 10 years and all the deals we've closed. We now train and coach people who are high net worth individuals selling a business or investment real estate or cryptocurrency or stock or anything else like that, on how to achieve what's called a transformational exit plan so they can create and preserve more wealth. So I know that's a long intro, but hopefully that makes some sense.
That's great. Sounds like you've had a great entrepreneurial journey yourself, and now you're willing to give back to startups also. So what should entrepreneurs know about the capital gains itself, the tax gains that come with running a business?
Absolutely. So let's start with the big demographics, and then let's dive into the micro. So the big macro thing that's going on is, according to the American Bankers Association, there's about $17 to $20 trillion that'll pass in the next 20 years. And this is known as the largest wealth transfer in the history of the planet. In fact, it's by a generation called the baby boomers, and they represent approximately 77 million in the US alone. And every single day, about 10,000 of them are turning 65. So this is known as like the silver tsunami. So they have a massive amount of wealth tied into highly appreciated assets, such as businesses, investment real estate, primary homes, stock, and they feel trapped to sell because of what? Well, 30 to 50% would be wiped out by capital gains tax and depreciation recapture. So a lot of them won't sell or don't know how to sell without getting hammered when they sell. along with other startups that we work with, they have multiple partners and moving parts, and they want to relaunch a new venture. But again, they don't want to get hit with that big tax. And so this is where we come in and we consult and help people understand A, what their liability may be, B, what their options may be, and then C, how to hire guides and a dream team is what we like to call it, to help you make the best decision when you exit that business or real estate.
So how can they manage those gains when they sell their business? What exactly do they need to do?
Yeah, great question. So the Deferred Sales Trust is really flexible in this. And this is part of why I think it's transformational versus a lot of other strategies of which I call are transactional. So for example, in a 1031 exchange, it only works for investment real estate, doesn't even work for a business. So we just did a deal recently in Alabama for a business owner who had two partners and they were going to buy him out. So he sold his position for about $2.5 million and was able to defer about $600,000 of tax. And see, he was ready to go on to his next venture, which is his next company, which was going to be real estate development with a partner and friend of his. And so instead of paying that tax, he's able to defer it all and then use those funds. I like to call it like the go fund yourself, right? You can get VC money, you can get angel money, which we'll talk about here in a minute. You can get a bank money, but you can also fund yourself with tax deferred money. A lot of people just don't know about this using a deferred sales trust versus a 1031 exchange, which only applies to investment real estate. And you have to buy like kind investment real estate in a short period of time. So that's more like transactional. Same thing with the Charitable Remainder Trust, right? And we love charity and people want to give away, but a lot of it requires all of it to be given away or a big percentage of it. And it's irrevocable, gone forever once you pass. Whereas the Deferred Sales Trust, it's really seamless. We have to call it like the Netflix way of doing things versus the old Blockbuster. You can invest in whatever you like, whether it be stocks, bonds, or mutual funds. You can put it into a new business venture with yourself or with partners. You can do ground up investment real estate. You can buy existing investment real estate. So it gives you a chance to diversify your wealth, okay? So there's some rules we have to follow and some guidelines we have to watch out for. We don't want to take on too much risk. This trust, by the way, has been developed 25 years ago, thousands of closes, billions under management. And so we do want to stay within the guardrails of what's been created with the tax attorneys who are my business partners and the financial advisor who manages the funds. But essentially, it's very flexible, Hall.
That's great. So it's a Delaware Statutory Trust. Does the entity have to be a Delaware C corporation or can it be any entity?
Great question. Well, let's first qualify what the Delaware Statutory Trust is and a Deferred Sales Trust. So just to clarify, we're not the same thing. So a Delaware Statutory Trust is just a form of a 1031 exchange. So where you can trade like-kind investment real estate and you can move it into a Delaware structure. I like to call it a DST 1031. So you're going to be restricted to those types of things. Whereas the Deferred Sales Trust, you can sell an LLC, an S Corp, a C Corp. You can sell a partnership, individual. It can be, again, highly appreciated public stock, private stock. It could be cryptocurrency. It could be a primary home. It's very flexible on what can go into it. So I'm not sure if that answers your question exactly or you need clarification on that.
No, that answers my question. So on a Deferred Sales Trust, I'm basically deferring my capital gains on this business and moving it to the next business or the next activity I may be doing. Is that how that works?
Yes, that's the full outcome. So let's walk through an example because I always like to give real life examples. So we just closed on a $8.3 million property in the Silicon Valley. It was a high-end primary home for an individual who owned it for a long time. And he was faced with a big capital gains tax. So he's able to sell that and then pay off the debt and then move the funds, the equity, the proceeds into the trust. And now they can go into stocks, bonds, and mutual funds. And they can go into real estate as long as it's investment real estate, can't be a primary home. And it can go into another business venture. Now, there's some rules to that. Of that, 80% can go into like a business venture of your own or with partners. The other 20% need to stay liquid in investment grade securities type of instruments to not put too much pressure on the financial aspect of the trust. So every situation is customized based upon the client's needs, wants, and risk tolerance. And that's what we do. We help you to build that out and work with you along the way. So is that answering the question, Hall?
Yeah, that's great. I hear that a lot with startups that are running a company and then they want to sell the business and now they've got all these taxes that they have to pay on it and they're looking for a way out and have been familiar with the 1031 exchanges with my contacts in the real estate industry and wondered if there was a similar thing we could do with the startups itself. So it sounds like there's similar mechanisms, although they're not exactly the same.
Yeah, you got it. You really hit it on the head, right? So it's a similar outcome. It's just a different path. And see, for example, you could sell highly appreciated cryptocurrency or a business, right? And you cannot 1031 that into another business. It's just, there's no option there. But you can deferred sales trust, park the funds there, and then use those funds to co-invest with you on what's called a JV partnership via a brand new LLC to start a new company. Okay, so again, that's why I say it's like to go fund yourself. So instead of selling, paying all the tax, sell, move it into the trust, and then use the funds in the trust to fund your next business venture. So same outcome, all tax deferred, right? Except the 1031 does not allow you to do that for just about every asset except for an investment real estate. But even then, you're just buying another piece of investment real estate. Oh, by the way, you're probably paying a pretty high price because the market is so high. And we call that the shotgun wedding, right? Get engaged in 45 days, get married in 180. And a lot of us don't make great decisions when we're doing that on a rush. And so the deferred sales trust, there's no timing restrictions, meaning you can park the funds and wait. In fact, one of the best deal stories we call is the Monday morning quarterback deal out of Minnesota in 2006. This gentleman played it perfectly, right? And he sold at the peak, and he sold about a $20 million asset. This is 06. And he's looking around saying, I think this thing's a little bit shaky here. I have a feeling something might change here in the next near future. And sure enough, it did in the 08 crash. And so he sold high. He did not do a 1031 exchange for the first time. He used the deferred sales trust, parked the funds there, put it into a conservative, liquid, diversified investment grade securities. And now the stock market did take a big hit, but we have some ways to be conservative there. And he was conservative. 5 years later, that property was sold, was foreclosed on, and he bought it back from the bank. The bank called him back and said, hey, you want to sell it back to you? And he says, well, what's the cost? And he goes, well, we just foreclosed on it from the other guy who bought it from you. How about 40% less than you paid for it? And so he said, sure. So he used the funds from the deferred sales trust, made a deal with the bank. So he bought low, right? And he sold high. He sold high and bought low 5 years later. And that's the transformation that you can have with the deferred sales trust.
So what's your advice for startups who are just now launching their business? What do you tell them to do to get ready?
You plan and you hire and find your dream team before you exit, right? A lot of the startups, a lot of the founders of companies that I work with, they're great at what they do. And part of why they're great at what they do is because they're focusing like a laser on what they do, right? And they're not tax professionals or even investment or multifamily or commercial real estate professionals. By the fact that they're so successful in the one thing, it can maybe mean they're not as strong in the other. Now, some of them completely have the crossover, right? I have a client of mine. He's sold a successful startup in Silicon Valley for $50 million, and he owns over $100 million worth of investment real estate. So not to say you can't do both, but the key is he leans on experts and professionals, brokers, tax professionals, and a team to help him. In other words, he builds the dream team to help him create and preserve more wealth. So A, you should already be starting to build your dream team now. B, you should be clarifying what your exit might be and what the values might be. Of course, that means C, make sure you know what the liability is going to be. The key thing, by the way, with the deferred sales trust and most every other strategy you're working with, you need to set it up before close of escrow. So the worst thing you can do is to be in a contract and be ready to close in a couple of days, and then you're trying to scramble to figure something. Guess what? If you don't set it up prior to close of escrow on 99% of our deals, especially if they're business deals, 100% of our deals, then you're going to have to pay the tax because this is what's called constructive receipt. So the key is pre-plan, get a plan, set up what you want to do. By the way, we work on a conditional basis, which is also different than most professionals. We don't charge anything unless and if we deliver results at close of escrow and the deal actually closes. So that takes the pressure off. So hopefully that answers the question, Hall.
So if I'm selling my business June 1st of this year, what time should I come see you? How far in advance should I be talking about this?
Yeah, great question. It's different for different people, right? Especially getting to know us for the first time. And it could be like we just did a $5 million deal 2 weeks ago, and we met the client 90 days before that. Right now, they had a relationship with a business professional who made the introduction, so they had a good rapport going there. The business professional had worked with us, so that one closed in 90 days. They're worth over $20 million. We moved the funds outside of their taxable estate. It was a really nice deal, win-win for everybody. So that was about 90 days. But if you're hearing this right now and you're considering selling the next 3, 6, 12 months, you should be talking to me in the next week, right? At least get the introduction, start to go through our online academy, our portal. Those are no cost for high net worth individuals who are considering selling something. And now you can get that education, right? And that's the key. You want to have all the pressure off of you and not being actually in escrow while you're making your exit plan decision, right? The worst is when you're caught up in the emotions. And we've come with deals like this where people have worked 5, 10, 15 years for this dream and they're selling, let's say, a $10 million asset, and they're in the last 30 days and then they're planning, but the emotional amount of courage to overcome not only selling their asset, but also to do a new tax deferral strategy with somebody who's they never met before can be daunting, right? And so we always say this: let's separate those emotions. Let's separate the emotion of selling the asset, selling the business, with the exit plan. Do your due diligence first on the exit plan, right? Start at the end in mind. What's Stephen Covey, right? What is that? Make sure you check that box. You're good to go, and then make sure you're focused like a laser on maximizing revenues, right? Transferring ownership to the next group, and so you're not having to cross those twos over. If that makes sense, Hall.
That makes sense. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Yeah, you should cover just the importance of diversification, liquidity, and getting out of debt right now. I think we're at an all-time high on so many levels, and for so many reasons. It's a perfect storm on so many things to potentially make this 12 or call it a 13-year bull market run. And guess what? New Biden administration, new higher taxes are coming. And so we think it's a great time to sell. Great time to sell, defer your tax, get on the sidelines, diversify, get some liquidity, pay off your debt, right? Versus staying in something. I mean, I think of WeWork, right? Which is, I don't know if you've done a show on that. I imagine you have. Just folks who had so much in that, right? And to see it all just kind of blow up. So if you can sell something that's highly appreciated, we've done Netflix stock, right? We're doing even some cryptocurrency deals now, and capture that value, diversify. Now is a great time to do that. So I would just leave your listeners with the importance of timing.
That's great. So how best for listeners to get back in touch with you?
Great question. So the best place to go to is capitalgainstaxsolutions.com. You can also search that on YouTube and iTunes. We have a podcast. And if you're a business professional listening, right, you're an angel investor, you are a commercial real estate syndicator, you are someone who's doing startups and looking to raise capital, you can go to experttaxsecrets.com. And what we do is we coach people on how to help others use the Deferred Sales Trust to unlock the capital to fuel their next business or a real estate venture. In fact, we work with a group called Praxis Capital, just for example, and they manage and own over $5 billion worth of multifamily investment real estate throughout the United States. And they're finding for the first time in their 30-year career that, hey, we can use this to unlock the capital from other sources to fund these new deals for us. So it's a great way to attract and unlock that capital as a professional.
That's great. Well, I want to thank you for taking time to join us today and sharing your experience and your perspective with the audience, and hope to have you back for a follow-up soon.
Thanks, Hall. It's been my pleasure, and hope to come back soon too.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.